Today we're going to be looking at the basics of market structure. Okay, so you can see here I have two structures here. Okay, so this is the first structure and this is the second structure here. So you can see that the difference here is that on this structure here you can see buy side liquidity being collected. Okay, price push up and then it push down. So on this one here you can see that price is failing to make a higher high. Okay, so price is failing to collect this buy side liquidity here. So if you look at these structures here and you are familiar with mitigation block and breaker block, you already know that this is a breaker and then this is a mitigation block. Okay, so these two structures, if you understand them, you are not far from understanding market structure. And if you understand them very well, you really understand market structure a little bit. So basically, this is what we have here. Let's just look at this before we move forward. So as price is pushing down, okay, so this is the low that we have here. So we have this low here, okay. As price is pushing down, what you need to have is a significant move going down. Okay, so you need a significant move going down so that liquidity void will be created as price is going down. Okay, so then later on you're gonna anticipate that price push back. Okay, so what's the idea behind? The idea is if price is pushing up, it's gonna be making higher highs. Okay, so it's gonna be making higher highs. Okay, so the moment we see price pushing up, taking this high out, and then all of a sudden pushing down and taking out this low here, that's what we call a reversal in price. Okay, if price pushed down a little bit, maybe gets to this level here because we have something at this level here, and then change direction, that's what we call a retracement. Okay, but the moment we have a break in market structure or a shift in market structure, that's what we call a reversal. Okay, it simply means price is most likely to be changing direction to the opposite direction. Okay, so in this case we have price was pushing up, and then after we have this low being taken out, that indicates a break in market structure. So since you have a break in market structure now, what you're going to be anticipating, you need a significant move going down. Okay, so that you're going to be have liquidity void being created so that price will push up a little bit just to close that liquidity void and use anything within this range as a point of reference to continue to go down. Okay, so it's the same thing here. This is a mitigation block structure. Same thing that happens here. You can see price it's now failing. Okay, it's failing to make what? To make a higher high. Okay, so we have a shift in market structure here, or a break in market structure at this level here. So price break structure here and it pushed down. What you want to see, it's a significant move going down. Okay, so you want liquidity void being created here. Let price create price imbalance. Okay, so you want price imbalance here, and then price it's gonna push up, close that imbalance, and use any institutional reference point as a point to sell short. Okay, so that's what you have when it comes to market structure. We talk about breaker block, we talk about mitigation block, and also another structure that you can add that can help you understand market structure. It's the QML structure. Okay, because the way they are structured, it's in favor of market structure. It's simply market structure. So that's how I started with understanding market structure and understanding directional bias. So let's just push. So this is what we have here. We have this clean chart here. So you can see here we have this buy side liquidity here, and then we have this sell side liquidity here. So you can see here we have this rally here. Okay, so we have this high here being taken out. Okay, So when price take out this high here, it's either two things can happen. It's either we're gonna have price continue to push up, which is gonna be our continuation, or we're gonna have price push down. Okay, but when price push down, it's not gonna break any structure. Okay, we're not gonna have any shift in market structure. We're not gonna have any shift in market structure. Okay, so if price push down and we don't have any shift in market structure, we call that a retracement. Okay, so it's a retracement that we call. Okay, so we call that a retracement. So in this case, you can see that we have price pushing down, pushing up a little bit. Okay, and then we have this low being created here, and then it pushed down, take out that low. Okay, so you can see that now we have a shift in market structure here, we have a shift in market structure here, and then we have price pushing back to this level of our fair value gap or an order block here, or you can just call it a mitigation block. So price push back to this level here, and guess what happened when it gets to this level? It pushed down because there is a significant move after that shift in market structure, and you have liquidity void and you have a fair value gap that needs to be closed. So you can see price push down. Okay, so it gets down to this sell side liquidity here. So this one now, you can see that these were this significant move going up. Okay, so this is the low that begins this rally of going up. Okay, so this is gonna be the major shift in market structure. Okay, so this is gonna be the major shift in market structure that you're gonna be looking at. Okay, so but then that doesn't mean that any shift in market structure here might not be a signal to confirm to you that you are most likely to continue to go down and target this sell side liquidity here. Okay, so the main driver here, as you are looking at price here, shift in market structure taking place here, it gives you now the idea, or it gives you the narrative that our price is most likely to continue to push and get down to this level of your sell side liquidity here. So it gets to this level here, it pushed to this level here, collect this sell side liquidity, and after that we get to see price push back up a little bit, and then it push down, collect this liquidity here, and then it push up. So let me not just, because let me just stick to context. Okay, so you can see that's what is happening here. Okay, so basically that's it. There is nothing difficult about market structure. So this is what we have. I believe we have already answered most of these questions as we were looking at the previous chart. So when you see price collecting either sell side liquidity or buy side liquidity, what comes to your mind? So that's the most important question. Okay, so whenever I see price collecting these buy side liquidity here, what comes to my mind? Okay, so the first thing that's gonna come to my mind, it's either I'm gonna have a reversal, or I'm gonna have a retracement, or I'm gonna have a continuation. Okay, so it simply means price might just continue to push up. Okay, or I'm just gonna have a little bit of a retracement and then price continue to push up. Okay, so if you are anticipating a retracement is a retracement because price will just pull back a little bit and then we don't have a shift in market structure. That's what we call a retracement. Okay, but when it's a reversal, okay, a reversal, it simply means now price is changing direction, or the trend it's now changing. Okay, so that's what you are anticipating when you are talking about the reversal. Okay, so all these structures and all these concept of market structure, being bearish and being bullish, and get to understanding bias and everything, it really relies on this concept. Okay, so when we have a reversal, we want to see price pushing down and collecting this sell side liquidity here, and then we call that a shift in market structure or a break in market structure. And then you're gonna anticipate that, okay, price it's gonna come back and close this fair value gap that it has created. So price is gonna push up and then continue to push down. Why do you want to see price continue to push down? Because you now already have the narrative that we have a shift in market structure, so price is most likely gonna continue to go down. Okay, so these are the things that I look at from the bigger time frame. So that's what I look at the bigger time frame. So let's just look at this one here. You can see here we have already established this fact here that we have a shift in market structure here, and then we have a shift in market structure here, we have a shift in market structure here, and then price has created a significant move going down. Okay, so then we have this liquidity void here that has been created, or you can call it just price imbalance with the fair value gap here. So then price push back. Okay, so when price is pushing back now, what we are anticipating, because we have already established that now price is most likely to continue to go down. We have already established that we have a shift in market structure. Okay, so when we see price going up, we are anticipating a retracement. Okay, so what we're going to be asking ourselves, what is it that we have here that our price is most likely going to close? Okay, so you see that, oh, we have a void here being created, we have a fair value gap here being created, so price is most likely to just retrace. Okay, why? Because we already established that we have a shift in market structure and price it's bearish. Okay, so this is gonna be, we are anticipating a retracement here just to close this here. So you can enter here and your stop loss, it's gonna be above this high here, and then you're gonna be targeting this sell side liquidity here. Okay, so price push, get down to this sell side liquidity. So you can see that after that has happened, we didn't have much of a push down. Okay, so we didn't have much of a push down so that we get to have a lot of liquidity on the downside, but instead what happened, price just take out this sell side liquidity and then it started to reverse. Okay, so what I wanted to see from here is just price pushing up and taking out this high here. The moment I see price taking out this high here, I definitely know that it's most likely to get to this level here. Okay, so this is the level that has been left here. We have liquidity void as price was going down, we have a fair value gap here, so I want to see price retracing to this level here and pushing down. Okay, so you can see here price push up, eventually it collected this high here, and then as price collect this high here, I indicated this area here, just shaded this area here because we might just have a retracement here, and then price continue to go up to this level here. So that's your research. You can go back and look at your chart. You can see what price did at this level here. So price got to this level here, and then we have a sell opportunity at this level here. So basically that's it about market structure. So this is the basic concept